All right, so let's see. It looks like we're all good. Yep, it's all on. So good week to all, and happy Monday, wherever you are. Happy holidays if you are in Australia. I saw there is a day off there in Australia, so I hope you enjoy your holidays. And before we start, a little introduction. If you watch me for the first time, my name is Vladimir Ribakov. I'm from Home Trader Club, and I am your guest analyst for the whole month of April. This is actually our last week together, and I really hope you found value and interest in the trading opportunities I shared with you during the month. And if you missed these opportunities, you can always go back to Eightcap channel and see these videos uploaded there for you, for your comfort. A lot of interesting opportunities building up, and yeah, maybe you would not want to miss it. So in today, I also have 4 very interesting instruments on my list. That would be the euro dollar, EURCAD, a follow-up on the gold, which we've been dealing with in the last few weeks, and the other one would be the S&P 500. Feel free to ask any question if you have any here in the chat, or of course if you will watch the recording, then in the comment section, and I'll do my best to answer as soon as possible. If you have any private questions you have directly to me, don't hesitate to contact me in hometraderclub.com. So let's begin first of all with the economic calendar. This week is busy and there are a lot of things happening. So for all those of you who have the access, if not, make sure you do have the access, go to the Eightcap portal and economic calendar. It lined up here for you, absolutely fantastic. I filtered it with high impact, so you can see the most important news during this week. It starts today with Australia, where we have trimmed mean CPI, the monthly consumer price index, and the consumer price index reads. And you can see here the expected numbers. According to the forecasted numbers, that's why we probably will see during the beginning of the week the Australian getting weaker. That's usually how it works. Like the market is trying to anticipate and already like observe the expected outcome inside the price. And if there is anything, basically, if there's any sort of deviation to the right or to the left out of the forecasted and expected numbers, then we can see the trend continues or changes accordingly. This is the first one to pay attention to. Then we are going to Wednesday, where we have the durable good orders in US, pretty important one to pay attention to, as look what happened on the last one. The previous was -1 read. So it is expected to get slightly better and go positive again. Then we have the GDP, the gross domestic product in the US, and the monetary policy, including the rate decision in Japan. They're not expected to change much, at least according to the consensus at the moment. But we already know from the experience with Japan, sometimes they surprise and surprise big time with their quantitative easings, add-ons, or when they change the numbers or cut the numbers. That's definitely something I will be paying attention to. Then we have pretty busy Friday, as you can see. Also press conference in Japan, and then we have the speech from the chairman in Switzerland. So yeah, busy week ahead of us in terms of the news that could, of course, boost up several trading opportunities. Technically speaking, there are several interesting opportunities I found for the week. As I said, it will be the euro dollar. it would be the Euro Canadian, and gold, a follow-up on gold, and the S&P 500. Okay, so let's begin with the first one. Let's take it here, the euro dollar. The reason I begin with that is it's one of the most loved, I would say, popular, common instruments among traders. You know what? There is a good reason for that, probably. This instrument has the majority of the daily volume among forex traders. So yeah, it deserves its respect. So starting from the higher time frame, just to get some perspective and understand where the wind is blowing yet on the higher time frame, we can see that on the monthly chart, what happened with the euro dollar is we got a bearish trend, clean sequence of lower highs, lower lows, and that did not change. So does that mean that for the long run after the rally we can still see a new low? It is possible, but we are not here to discuss what could happen on by 2025 or 2030, at least not on this half an hour. But the reason I show you this long term is because at the end of 3 waves, the markets usually make a corrective movements. When corrective movements or corrective structures, we call them, right, patterns, are usually defined as 2 waves or any sort of ranges. Okay, so that means for the coming period, I would say the focus should be on buying the dips for the longer run. I'm not talking about the day trading, of course. I'm not talking about the short run. But for the longer run, buy the dips might be, technically speaking, smarter decision. And let's go to the lower time frame, see where does that bring us. Okay, so if we go to the weekly chart as followed, here is what happened. So we did have a bearish trend. This is the last monthly leg we saw before. We did have a bearish trend here where the market is making a sequence of lower highs, lower lows. Pretty classical, standard. And after riding on the lower part of the Bollinger Bands for over than 20 candles, we saw the massive reaction the market had. With that in mind, okay, what happened since is the weekly indeed building up the corrective structure I mentioned before. That at the end of the trend, we have corrective structures of ABCD or 2 waves, and or a range. So based on the weekly waves, the waves are fitting in properly, and it does build the ABCD corrective structure, the 2 waves corrective structure. The monthly is probably yet to build up. So if the monthly is yet to build up, according to that, the weekly should follow. How very likely the weekly will follow that case, or we will complete here some slow or descending 3 waves before a pullback and continuation, or a zigzag structure, 2 waves up, 2 waves down, and to retest the broken the previously created lows where the buyers managed to take the control from, and from there a continuation. Okay, so for with that in mind, I take it to the next step, and let's plot Fibonacci expansion on these waves, and we will see up to where the euro dollar has the potential to rally. Okay, so 61.8 expansion of the current ongoing trending structure corrective phase. What we have here is around 114, 115, close to round number, which is absolutely logical because, well, round numbers create a lot of interest among the traders. So very likely to assume that for the long run, the euro dollar still has the room towards this zone. Besides the interesting Fibonacci expansion and that being a round number, we also have here, okay, the last important resistance Okay? It was, look how it was developing. Okay, the resistance was broken, then became a support, right? In this uptrend. Then we're moving down, a broken support now becomes a resistance. We go below this level and we are holding the level. So we create here a massive zone of resistance. Okay? And very likely that as soon as we get there, then we will possibly see rejection. But the road there is very likely not over. And with that in mind, we go to the lower time frame. Excuse me for a moment. Something bothering with me. I'm sorry. With that in mind, we go to the daily chart, and here are the waves on the daily chart. So the first, you remember the first weekly leg I was drawing, right? This was the first weekly leg. So we got it broken into 3 smaller waves. And then one weekly leg will be broken to waves on the daily chart. After that, we followed by a corrective structure. Okay? And since then, we are building up the bullish structure, which is very likely, again, take us eventually towards the zone we discussed before. Now, with that in mind, the logical plan for us here is to buy these dips and to try and to ride it. Okay, so with all this multi-time frame analysis, we go to the daily chart, the 4-hour chart, to trying to spot the shorter waves and how will they affect and provide the opportunity. Based on the 4-hour chart and the sequence of the highs and lows it created, we have this as the most recent resistance, and the previous resistance is here. So this is our first key supportive area. And the next supportive area basically comes through broken resistance that becomes support, and the lows it managed to hold, a low and a low, right? This is our next key level. So the 2 scenarios I want to follow, since the euro dollar is trying to make some push here, what is very possible is this area is holding, retested, right? And then breaks through the trending structure pattern and takes a rally towards the zone before. The other, well, I would say ideal, because it would provide better or deeper risk reward, is if we manage to get a break below this little range here, mini range on the 4-hour chart, something like that, retest the next key zone, and from there load the rally towards the desired levels. I said ideal because such scenario, if happens, would provide much better risk reward. The risk here would usually be smaller, and if the analysis will turn to be correct from the higher time frame, the reward could be significantly larger. And that's why, again, ideally I want to see this drop happens. And we know that the market is not always Mr. Ideal. That's why there is always plan B, and plan B for us is basically this, right? So pull back to this zone, the broken zone we discussed before, hold, and boom, flies through the previous highs. That should provide a good continuation. So this is about that's how I see the euro dollar. And the 2 levels I'll be really following for the buying opportunities. I believe that if the bullish trend from the higher time frames is the controlling one yet, there is more to come, and this more could be really providing nice trades with great risk reward. The next one on my list would be the Euro Canadian, another amazing rally we experience here, and I'll talk about the Fibonacci's in a moment. But let's start with the higher time frame to see. I'll remove that for now, and I'll bring it back later on. And let's take a look from the higher time frame. What do we have? So a big view, or observation, or observation on the last 2 decades teaches us what? That the pair doesn't have a trend, right? It doesn't have any trend. What it does have, it's a range, which is not a problem, because usually with ranges, it's pretty classical. You want to trade from the lower part to the upper part, right? And when it's stuck at the middle of a long-term range, that's where it could be very interesting to look for the short-term opportunities. Because when such range on last 2 decades happens, consider that as a classical opportunity. When you are on the top of the range, right, above the middle price. The middle price is where the market always will try to reach, the middle. So when you are way above the middle, the pressure becomes bearish. When you are way below the middle, the pressure becomes bullish to take the price back to the middle. And right now we are very close to the middle. And with very close to the middle, it's not a long-term opportunity anymore. It becomes more like a short-term opportunity that could provide opportunities that here and now. And that's pretty much where I find that interesting. Because the here and now, remember the monthly level, right? But look what happens on the weekly chart. So we did have, exactly like in the case of the euro dollar, we did have several waves to the downside, right? And the classical part here is, again, right on the lower band of the Bollingers without significant pullback, which eventually brings the flip and the big 2 waves. How big? We are talking here about more than 2,000 points. It's significant. So what happens since is we are close to double Bollinger Band duplication. Okay, so what we can see, the bounce from the lower band to the upper band, one duplication of this range, okay, the distance from the lower to the upper, one duplication, and we are close to the second duplication. We already start to see the red Bollinger Band, which means the market is riding on the upper Bollinger Band without significant pullback, at least to the opposite band, which by itself increases the pressure on the buyers, and hints that very, very likely sellers will eventually take the control from here. So with that in mind, and the duplication level in mind, a quick analysis over the last important swing highs teaches us what? That we have here a key zone. Okay, what and why this is a key zone? Because on the wave down, this rally, and look what happens. The sellers reject massively for several months in a row. Every time the buyers are trying to push through the level, sellers reject. Therefore, all these spikes. This is also a psychological round number 150. So the closer we get there, the stronger the pressure will be. And from there, very, very, very likely, we will see the market bouncing back at least to the lower Bollinger Band. Okay? Now, to support this view, we also can see how, while the market is making higher highs, indicator starts to create lower highs. This is a hint on what is very likely coming on the long run. When I say here long run, it's again, it's all relative, right? Compared to the monthly, it's short run. But looking when we go to the lower time frame, like then in the 4-hour chart, the weekly could be a long run by itself, because it takes weeks until such moves happen. Okay, but it's important to keep in mind the levels and the direction. Why? Because on the short run, I still expect to see here a little final push, okay, before it all reverses and the move down starts and happens. So with all that in mind, I promise to bring back the Fibonacci's. If we take a look on the first leg of the Fibonacci expansion, let's increase it like this a little bit, and then we go with the second wave. What we can see here that we are approaching, or actually already there, right, in between 61 and 161.8 Fibonacci. This is a golden ratio in the Fibonacci. It's a classical zone here next to the weekly Bollinger Band duplication, the rejection zone by the sellers, the psychological 150, and to prove the pressure here between the swing highs while the market is making higher highs, we are seeing lower highs on the indicator. Classical indication that the buyers are losing it. And what I expect here is on the short term, the market will try to finalize this rally, or to, to maybe not nice way to say it, but to wipe off the those who sell very, very early without the signs. And there are always those who try to sell just because the price rallies before official turning signs building up. So the market usually cleans these early entries until those early entries get disappointed by the market and just leave the market, right? And from there, I believe we should be looking for these reversal signs. And with that in mind, going down to the 4-hour chart or even the 1-hour chart, a pullback here should provide good, legit opportunities to go and enjoy this final rally. So pullback to any significant supportive zone we have on the way, and that's the first zone, which is we can see holding, right? Why specifically here? You see one big candle, right? And since then, the range of this candle is holding. And the previously broken resistance that now becomes a support. Any pullback to this zone could be a good short-term rally. And from there, as I said, I believe we should see some slowing down highs and the reversal. So this is my EURCAD. Excuse me. I believe that the way it is building up looks very promising and could provide very, very interesting opportunities, both the short term and the longer term. And the last, that was the Forex. Then I want to go and do the follow-up on gold before the last one, which would be the S&P. So on the gold, our view we've been talking about the last couple of weeks is we want to buy the dips for the gold to go and create an all-time high. The plan did not change. The plan is exactly there. And right now we see this pullback happening. I was explaining the upper band, right? The market was riding on the upper Bollinger Band without any significant pullback. And this is exactly what we see right now, at least to the lower part of the Bollingers. So what do we have here? We have a rising supportive line. We have previously broken resistance that becomes a support. And of course, a quick analysis of the candles. We can see that as soon as we left the Bollinger, we created this big candle, which you can see ever since the market was trying to retest it and nothing happened. So all that becomes very important zone. Okay, and I believe that here we should be looking for our further buys. And with that in mind, going down to the 4-hour chart, we will see there the opportunity. So right now, we got the first pullback, and right now the market is making its second leg. Again, we have the significant zone we discussed before. I want to see this move down complete itself, and while the market will try to make it look like it's a bearish move, we should see here some higher lows. While the market making the lower lows, the indicator will start to make higher lows. That would become an indication that the sellers on the short term are losing the control. And with the higher the time frame in mind and based on the analysis we just did, to look for further continuation there. So this is the current short-term pullback happening on the gold and still ongoing. And as soon as we reach the key levels, we should be looking for the reversal signs. Okay? Reversal signs could be like, instead of making lower highs, lower lows, the market reverses and make higher highs, higher lows. And of course, then break above falling resistances, creation of higher highs, higher lows on the chart, and this is our sign that very likely the buyers are back in the game. So this is our gold, and again, the one we've been following for last few weeks. Indeed looks interesting. Both the short term, which is still making the correction, and the long run, which still looks very promising. And the last one for today would be the S&P. A lot been said about that. Is the market ready for a new all-time high or not? I'm not going to try to analyze the long term here. I do want to show the short term. And on the shorter term, well, shorter again, relatively, we go to the weekly chart. On the weekly chart, what we did have is 3 lower highs, lower lows, which is a structure of a bearish trend. However, as we can see, we don't have like way too much of this trend, so it's still considered to be it's only about like 40-50 bars to the downside. Since then it's correction, so we don't have over than 90-100 candles to consider that a real ongoing holding trend. But what we do have here is a very possibly first, just go different color 1 second, first corrective leg among the two that could come and happen, or at least some long-term range, which is also a very, very possible scenario. Now, with that in mind, what we could understand from that the corrective movement that currently taking place already is losing its momentum. While the market is very lazy making the higher highs, right, we start to lose the momentum. So there are no reversal signs yet like this trend line breakout that we are ready for the longer move down, right? But on the shorter view, we are definitely running into a strong resistance or rejection area. With this zone in mind, we go to the daily chart. Okay? Again, this is our rejection zone. You can see how it starts to round, right? Making it slower and slower and slower. And that makes me think that every rally that takes place in such case could provide the opportunity to actually go and look for the next sells. And that's exactly what I want to see on the market. I want to see this rally, which I believe that should be the last one. Okay, so something like that. Okay. And then while the market makes higher highs on the key rejection level we saw from the daily and the weekly chart, this is where I'll be looking for lower highs on the indicator. MACD or the RSI, my favorite to find. It's called the bearish divergence in that case, or negative divergence. That's a condition where the market is making higher highs, but the indicators make lower highs. So the mathematics behind the price movement represent a deviation, right? Or contradicting signs to the mathematics itself. So if you think about a simple logic here, think about it this way. If there was like 10 billion on the first push up, and then 8 billion on the next push up, and then 6 billion, and then only 2 billion, right? What do we learn from that? That at this point, there is much less interest from the buyers to hold and maintain the price. And eventually, with these contradicting signs, what will happen there, that the sellers will take that control. So with the S&P, my expectations is sell the rallies. I want to see these rallies, and I want to see the market making new fake high when the bearish divergence or the lower highs take place, and confirm ourselves on the indicators, MACD or the RSI, my two favorite. Then this is a classical place to go and look for the sells. So these are the 4 instruments I find very interesting and promising for the beginning of the week. Once again, it will be the Euro Dollar we discussed, the Euro Canadian, which I believe has all the characteristics and the price behavior currently to become a beast opportunity. We have the gold and we have the S&P 500 to follow up. So these are the four for the start of the week. On Wednesday, I will be holding the midweek session. Join us in a live webinar. And I would like to thank you for your time watching this video, if it's in live or if it's in recording. I hope you find your value in that. If you do, make sure you like the video and subscribe to Eightcap channel. They keep bringing every single week after week, amazing analysis and opportunities here for you guys. So make sure you enjoy from that. And again, thanks for your time. Best to you and yours. I'll see you Wednesday. Bye for now.